The gold and silver market are seeing prices rise just a bit today on Friday, with silver up 40 cents and gold up 260 as of 11 o'clock a.m. Eastern Time. Peter Hugg, Global Trading Director of Kitco News, is back to talk prices, sentiment, and the physical market. Peter, welcome back.
Good to be here, David.
Every week we talk, there's new developments, but this week it's been kind of quiet. Silver has fallen back down from $30 following the short squeeze action from a week and 2 weeks ago. Has the focus for investors now shifted back to gold, do you think, Peter? Are you seeing that in the price action today?
No, I think there's still demand from the retail side, especially in North America, for both gold and silver. I think what's quieted down this week is that investors are starting to get a little price shy and chasing these premiums because of what happened a couple of weeks back. As I mentioned, it's going to take a while for dealers to rebuild inventories. And as a result, premiums on silver product, like coins especially, are north, in some cases, north of $10, similar to where they were in March of 2020. Gold premiums, there's a little bit of a different story there, but the gold premiums on buffaloes and eagles I've seen dealers as high as $175 over spot. Now, for the gold buffaloes and gold eagles, and to some extent the silver eagles, the U.S. Mint is doing a switchover, and my understanding is that they've stopped producing buffaloes, so there's no new minted buffaloes on the market. I mean, you might find the odd dealer has a few left in inventory. Eagles are going to be stopped. 1 ounce going to be stopped being produced today. And then there's going to be a hiatus as the U.S. Mint gears up production and produces 2021 gold eagles and silver eagles with the new obverse design. That's not anticipated from a supply perspective to hit the market probably until April. So you're going to have this window here, possibly 6-week, 4-week window. I do anticipate dealers will pre-sell it once they know their allotment, where there's going to be a considerable tightness or a continued tightness in both the gold and silver coin market in the U.S. Gold maple leafs are still somewhat readily available, and even though they're trading, based on our price points, about $40 below eagles and buffaloes, there doesn't seem to be a lot of offtake from a U.S. investor's perspective. Again, that always confuses me why you wouldn't buy a 4/9 gold coin as opposed to a 22 karat gold coin. But so there are still some gold maples available at, we'll call them reasonable premiums given the current situation. But overall, the market is tight, both in gold and silver, and I don't anticipate that tightness is going to abate for probably could be as long as 3 months.
Okay, yeah, I spoke to somebody from the Perth Mint not too long ago, and he said pretty much the same thing. Premiums will remain elevated, with demand continuing to stay elevated as well. Now, let's talk about bond yields offline. We spoke briefly about that. I wonder if the U.S. Treasury yields have anything to do with gold being stuck in a range right now.
Well, we had the 10-year at 105 at the beginning of the week. This morning it touched 120, or just shy of 120. So that created a little bit of strength in the U.S. dollar. I have to tell you, I'm not impressed with the strength in the U.S. dollar with the 10-year at 1.2. So I think it's a short-term event, and I do believe the dollar will continue its downtrend. There's just been a lot of sort of mixed signals in this market over the past week. Other than besides the premiums going through the roof, and again, I would, if you're patient, I would. But you still want to enter this market. There are other vehicles that are offered by dealers. We offer one where the Royal Canadian Mint is the custodian of the metal. Again, it's a matter of you have comfort in that type of a position. You can enter the silver market at about a 60-cent premium to spot, and gold at give or take about a $30 premium to spot. as opposed to paying $170 for coins and $8 to $10 for coins in silver. And then you have to be patient, and somewhere down the road, this market is going to quiet down. And within that window, inventories will start to build and dealers will come down with their premiums, and then you can swap for your physical product if that's your end goal. But what's happened over the past week with this, this stupid process that's going on in Washington now, there's
Tell us how you really feel, Peter.
Well, we know the end result. We know the Republicans are not going to vote to impeach Trump. I know probably from a perspective of history, this is an important event. But we know the end result. But meanwhile, the government has been shut down in essence for a week and probably for a couple or 3 days next week. And, the economy needs a stimulus package. And, this morning, again, there was some chatter that there's possibly as many as 5 Democrats that are going to vote against it, which means now Biden, this isn't a slam dunk anymore. Now he's going to have to get those 5 Democrats, if he loses them, from the Republican side. So now there's a possibility the stimulus might be on hold. So, there's just a lot of conflicting information in the market right now, and that's sort of causing the metals to stay in a tight band. They're waiting for a catalyst. And then you've also got China with the new year next week. And so the industrial demand side is going to be muted, at least through the end of next week. So, there's just a lot of noise in the market in the very, very short term.
I'm not an expert on politics. I'm wondering, help me understand this, Peter. Why are they not dropping this impeachment trial? Trump isn't even in office anymore.
Well, I think, to a great extent, it's probably political, but they believe that, the Democrats, at least they say, they believe that he incited violence and that he should be impeached as a president. I'm not going to argue that they don't have a case, but it's very apparent to me that the Republicans, half of them weren't even in the room yesterday. Listening to the evidence. So, they've made up their mind. I would be absolutely amazed, unless for some reason they voted anonymously, that the Republicans would have 17 members vote for impeachment. So, but the problem is, this is all going on when the economy is still in a mess.
So from what I understand, the market impact here is that the fiscal stimulus debate is being postponed or delayed because of this?
Well, yeah, you would think that the first thing that should have happened Monday of this week is there should have been a bill passed by the House for the stimulus package and then voted on by the Senate by the end of this week. So we'd have some clarity as to what's going on. And the earliest that's going to happen is probably go through the House sometime mid next week, and the Senate votes on it the week after. And again, now it's up in the air whether or not, even though they have a majority in the House and the Senate, whether the Democrats can push this through without Republican support. And that's a big question mark. So it's possible that they may need to compromise significantly on this 1.9 trillion, and the market is expecting it. So you take that out of the equation, it could have a market-moving type of scenario for all markets, including the metals, but equities for sure.
Yeah, well, we might coincide with same thing happened almost a year ago in March. Well, maybe not to the same extent, I suppose. Lunar New Year, you brought that up. Demand is usually high around this time of the year, right? Or is it an anomaly this year? What are you seeing?
Well, the demand, again, you sort of buy into the holiday, and then when the holiday happens, you enjoy your holiday. So, the buying that on the retail level that would have occurred for the Lunar New Year, there's a number of mints that have coins that represent the new Lunar New Year, and we've done well in selling those to retail clients in Hong Kong, where we have an office. Actually, what surprised me with our Hong Kong office over the last couple of weeks, we've had, again, I'm not sure why this is, but we've had actually quite a lot of liquidation of silver into our Hong Kong office from retail clients, with the exact opposite happening in North America, where people were chasing the silver market and buying anything that was available. Now, I don't know if that's a trend, but we picked up well over a metric ton of silver, which doesn't sound like a lot, but from retail investors selling back, that's a good chunk of silver coming back in to the market in small investment size bars. So we'll see if that trend continues, but it looks like the Chinese, at least retail Chinese, were taking advantage of silver in the 27, 28 level and liquidating into strength, as opposed to North America chasing the market at 28 and buying into strength. So I'm watching that. I just want to see if that was a one-off or whether that's a trend.
I want to talk about sentiment in the gold market now. As you know, Elon Musk tweeted about Bitcoin not too long ago, and Tesla is now allowing customers to buy cars with their Bitcoin, and they're investing in Bitcoin. As soon as the news came out, the price of Bitcoin shot up. I wonder, why can't the same thing happen for the gold market? Who's going to be out there tweeting about gold, which is going to move the market significantly? Could you see that happen?
Well, I mean, if you would have read the filing from Tesla, they actually were.
They want to buy gold as well.
They bought gold as well. I'm fairly positive the gold market. I mean, I'm just going to speak as a layman because I really don't understand the concept. I understand the concept of Bitcoin, but you've got a market that has a limited supply, and Elon Musk, all kudos to him, bought 1.5 billion before he then released this tweet that he liked Bitcoin. It doesn't take a lot to move the market up $4,000. I just don't think you can do that in gold. I mean, you had, what's his name, Warren Buffett, he came out and loved gold. I'm not sure when he said it, where the price was. And
did he say he loved gold, or did he just buy Barrick shares?
Same difference. I mean, he was bullish gold. I mean, if gold goes down to $1,200, Barrick is not going to go up. So I mean, I think he was bullish the commodity generally, and he picked Barrick as a solid blue chip mining company that paid a dividend. But anticipating, because gold was going higher and Barrick was going to make more money because of that, that's why he bought Barrick. If he was bearish gold, he wouldn't have bought Barrick, unless he had some other inside information where Barrick might be a takeover target or something like that. I mean, there'd be no reason to be buying Barrick if you were negative to commodities. So I think he is positive the commodity cycle. I am as well. I think there's a lot more upside to come. You've just got to ignore the day-to-day noise. But for somebody to come out and say, I think gold's going to be at $5,000 an ounce, and that comment alone moving it up there is just not possible in a market that's as big as the gold market.
Right. You have to have every single billionaire hedge fund investor and industrialist in the world coming out and saying gold's going out to $5,000. Maybe that'll inspire people to go out and buy it.
We're in a bull cycle here in the commodity space generally. That's my opinion. And the blow-off stage in a commodity bull cycle is nowhere near in sight. And you would think that, well, we had the blow-off stage from 1,400 gold last March to 2,200. That was not a blow-off stage. That was just a fear trade. And now gold has settled in and is holding sort of the 1,800, 1,850 range. If the cycle is still in a bull phase, and I believe it is, and I think commodity cycles run anywhere from 7 to 10 years. At best, we're a year into this cycle, maybe 2. So the best is still to come, and it's usually at the very end of the cycle where you get a blow-off stage, and then everything gets recalibrated, and then you end up going back into a bear market. So we're not even near that top. It is frustrating when you're an investor looking at gold sitting at 1,800 and watching Bitcoin take off and watching the equity market continue to run, feeling that you've made a bad investment. So again, it really depends on the psychology of who you are. If you're a trader, there's been multitudes of opportunities to make money, both in gold and silver, assuming you were on the right side. But for an investor, again, if you've got a portion in your portfolio in metals, just don't look at it every day. I mean, I honestly believe that we're at the beginnings of a commodity cycle that will eventually culminate in inflation considerably higher than where we are now. And until the central banks start to tighten monetary policy, you have to be bullish the commodity cycle. And there is no visibility at all that they're looking to do that until at least sometime mid-2022. So we've got plenty of time of this liquidity being in the market and continuing, if not increasing. And in that context, I just can't bring myself to be bearish the gold market.
I've noticed a close correlation between gold and inflation expectations. And so if you take a look at just the years between 2012 to 2018, 2019, for example, inflation was relatively muted during that time. It was flat. Well, it was constant 2 to 3% in the US. Inflation expectations weren't very high, and so gold kind of stayed flat as a result. So maybe that's what we need. Maybe that's what we need, a spike in inflation expectations, much higher than what we've had in the past few years, and maybe what we have now. What do you think?
You've got to look at the cycles. Remember in 2011, what did the central banks do? They went into a taper program and they tightened. So they sort of took their foot off the accelerator. And then in 2020, they had to push that accelerator all the way to the floor, and it continues to be at the floor. So we're in sort of the 07 to 11, we're in the sort of 74 to 81 cycle in the commodity space right now. And I think in very early times. And then you add to that equation, if the economy does recover and the central banks remain muted on their tightening, which I believe they will, you have now the economy starting to rebound. Now industrial demand picks up. So you're getting demand cycles coming in from the industrial side now, which has been muted all through 2020. That was basically driven almost exclusively by investment demand. And you don't have the central banks liquidating metal; they're still buying. So I mean, when you add it all up, it's difficult to be bearish this market. Is it possible gold goes back to 1750, 1700? Yeah. But that's just normal stuff. But the bull market itself, I think, is alive and vibrant, and it's a matter of patience. And we will get that cycle to a blow-off stage. Can't tell you what year that is going to be, but it's going to come. And when that blow-off stage comes, that's when you'll start to see the central banks start to reel in their liquidity gas pedal and start to tighten. And when that happens, that's your signal that we're probably approaching a top.